Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. Today is the 16th of January 2014, and the time in London is 14:35, in New York 9:35 a.m. Happy day trading to you all. The title of the video is Forex Day Trading Part 2. As you can see here, 16th of January 2014, time in London 14:35, New York 9:35 a.m. Forex Day Trading Part 2. We are looking at the Euro USD, which is the leading currency pair, the number one currency pair that we must keep eyes on. We're going to start following what we call the trading drill. Okay, you may have been taught to day trade, okay, in different way, but you can perfectly day trade. But if you do not know what is the trading drill, the trading triangle, if you do not understand that the price, the number one indicator, you will be going round and round and round. Alright? To trade like professional traders, or to day trade like professional traders, one must understand the trading drill, the trading triangle, and understand that the price is the number one indicator. Alright? So what's happening here? As I've talked to you before in the first part of the video that we call Forex Day Trading Part 1, we have drawn this trend line, the pink trend line, you remember, showing this point and this point, and also, and we draw the pink trend line, and also I highlighted some key level, the horizontal line and the turquoise line. Here you see the turquoise line is still here on the charts. So on the daily charts, the Euro USD is below the moving average 30. I recommend to traders to watch the video that we title "The Power of the Moving Average 30" at www.youtube.com/dayprotrader.com. That video will be available for the public, okay, tomorrow. All right. Unless you are already a member of our website, you already receive an email, you will be watching that video already. But that video will be ready for the public tomorrow. So here we are. You can see that on the moving average 30, the price on the daily chart is below the moving average 30. When the price below the moving average 30 is in the bearish zone. If it's above the moving average 30, is in the bullish zone. Now the question that we have to answer: how do we buy and how do we sell? All right, that's the question. So the euro on the daily chart is below the moving average 30 in the bearish zone, but also is retesting, okay, a bullish trend line, which is the pink line here. So it's a bit of mixture. The price has a high chance to consolidate between the moving average 30 and the pink trend line. So if it's going up, we need to watch the moving average 30, okay, because there's a resistance there. Until if you are buying here, you need to be careful and also pay attention to the turquoise line in the zone of 13680, and also the moving average 30. In the first part of the video that we call Forex Day Trading Part 1, we were also applying what we call, okay, when the price distorted, okay, I was drawing the line on the 3-minute chart. I hope we can see all this line on the 3-minute chart, otherwise I have to change the time frame. We can't see them now. We have to go to the 10-minute chart. Hopefully we see them. Where are my lines? Oh, never mind. Okay, if we go again to the hourly chart, there was a distortion here, you see. The price went vertical. This is not a normal market pattern. This is not a normal market progression. A vertical move is a distortion to a certain degree, except during the third wave. All right, and we told traders that the price has a high chance to pull back to the median line of the distorted section. So it touched it here when we were recording the first part of the video, and the price closed below it. And I was telling traders that will the Euro USD retest, okay, the lower part of the distortion to cancel completely, or to correct or to rectify this distortion. When a distortion has taken place, there's a high chance that we may see a correction. But as the price going down, we must pay attention to the media line. If the price failed to go to find a support at the media line, there's a high chance that it will be a total cancellation or total retracement. And as I told trader, the price, you see, since the beginning of the week, Monday, the price quickly, slowly, and cancel it. Okay, this is the distortion here, and it has been totally cancelled. Can you see how the price stopped on the dots where it canceled it? Where I put my line at 13577. Do you remember? Now, on the hourly chart of the Euro USD, ladies and gentlemen, the price is now above the moving average 30. So, on the daily chart, the Euro USD is below the moving average 30. On the hourly chart, the Euro USD is above the moving average 30. That's why I said to you there's a high chance that we may see a consolidation, which means the price may be going ups and down, ups and down, ups and down. So, because the price is below the moving average 30 on the daily charts, trader that on a daily chart will be looking for opportunity to sell at the key resistance level when they receive a sell signal. But if you are looking only on a daily chart, this is a typical day trading mistake. You do not make your trading decision on one single time frame. Alright? You must use a multiple time frame trading system. Okay? If you see a setup, you must validate the setup. Follow the trading drill and the trading triangle. So what's happening now, okay? So you're on the daily chart is at a support level around the peak line. The moving average 30 is bending down, which is bearish, but we want to sell at the key resistance level. Alright? So the level I want to watch is the turquoise line in the zone of 13680. If it's going up, watch that level carefully. But if it dip below the peak line or dip below the level of 136, okay, 34, alright, and the final resistance below that level, we look for opportunity to sell. At the time when we are about to enter the trade, we must zoom into it because as a day trader, we want to see what is taking place now. So I'm going to there, I'm going now because I use 3-minute chart very often, alright? Nothing special about it. We can use 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, alright? So on the 3-minute chart, because my name is Trio, alright? So you can see that there was a bearish channel and the price went above the bearish channel. Also, this resistance here, you see 13634, okay, that's the level here. So if he failed to find a support, as I told you, he failed to find a support above 13634, all right, that will be bearish, all right, because we will expect it if it's going to be bullish up to the turquoise line that we have seen on the daily chart. He must find a support above the level of 13634. So keep eyes on it. You see here, this level, the same level. All right, now it breaks above it. People will say it's a breakout. But on a daily chart, we know that the price is below the moving average 30, which is a bearish zone. Another thing I need to say to you, because we mentioned what we call, all right, the trading triangle, quickly to check my time, because I don't have to go above 20 minutes for this video, all right, very important for me. So I'm talking to you now 8 minutes, can you see? 8 minutes only, don't worry, stay tuned, all right? So we will be watching the euro, whether it's going to find a support here to continue the move to the turquoise line on a daily chart in the zone of 13680. All right. But because we were talking also about the trading triangle, how do we apply the trading triangle? Now that New York is open, very often, if the Dow Jones is bullish, the euro has a high chance to be bullish. If the Dow Jones is bearish, there's a high chance that the euro will be bearish. Very often, there is a correlation, a positive correlation between the euro USD and the Dow Jones index. We know that. And also with crude oil. You understand? We want to learn to day trade like professional traders instead of just looking at one financial instrument, violating every market principle, violating the trading drill, violating the trading triangle. That's not the right way forward. So for those reasons, ladies and gentlemen, I'm going to look at the Dow Jones index to see what's going on there. All right. Here it is, the Dow Jones. So yesterday I posted a video, first on Facebook, now also on YouTube channel, Day Pro Traders channel, introduction to Master Day Trading, Dow Jones. Check for that video, introduction to Master Day Trading, Dow Jones, at Day Pro Traders channel. So this is what we were doing yesterday. You can see I was telling the trader we are bullish. And as the market did open yesterday, I entered a trade here. You remember if you watched that video. And I exited the trade as the price was approaching this target level. So since yesterday the price was stuck here, if I extend my trend line on the chart, you see that it couldn't go above okay, the second projection of my first channel here. It just stuck here. And I was telling you that it was a bit risky trade when I was entering the trade, because we will prefer the price to retest the pink line here. But yesterday it did not. So today, what the price doing? The price coming near the pink line. So for this index, we must now watch this level carefully. Remember the pink line here, all right? This pink line here at the level of what it was at 136.85. Okay, 136.85. That's where the pink line is. So for the Dow Jones, we will expect Dow Jones to find a support here. If the Dow Jones finds a support here and it's bullish, that will be in harmony with what we are expecting the Euro USD to do. Okay, also around the pink line. So if the Dow Jones goes below the level of 136.85 and find a resistance below it, that will be bearish. The same thing we have said for the Euro USD. If it did below, okay, the support level that I highlighted for you, that will be also bearish. So we need to keep eyes on the Dow Jones. If it's bullish from this point onwards, all right. So draw your channel, extend your line. So I can extend my channel like this. So you see here. So I can see clearly what is taking place. I can extend it gently, ladies and gentlemen. Are you with me? All right. So this is it. So now it D below the bullish channel. Now if it start going up, watch it. We leave from a resistance here, okay, and then change direction and come down. It can be messy because okay, there is a support here, there's a resistance here. We will see what's going to happen. All right. So watch the video that we call Introduction to Master Day Trading Dow Jones at dayprotrader.com, and also use the trading triangle, use the trading drill. All right. Pay attention to the economy news. All right. And we will take it from there. I also told you that when a market is open straight away, we do not place a trade because of the market adjustment. All right. That's why I'm referring you back to the Introduction to Master Day Trading Dow Jones, because I don't want to repeat myself. So now the time in New York is 47 minutes past 9. We will wait until 10 a.m. Eastern time before we start making day trading decisions. This is to avoid the distortion and market adjustment that can create the false setups. So in exactly 13 minutes, it will be 10 a.m. in New York and 3 p.m. in London. I will come back and continue to record this video. I've been talking to you now 12 minutes, nearly 30 minutes. I'll come back to you this video, but before that, I'll pause the video at this point in time. As always, I'll put my turquoise line there on this 3-minute chart for Dow Jones. Put my turquoise line where we are stopping, and when it's 3 p.m. in London, 10 a.m. in New York, I'll come back and see whether we have a trade setup or not. You can see some traders start buying here around this pink line. We will see what's going to happen, but we will wait again patiently, no rush, until 10 a.m. Eastern time. I'm going to go back again to the Euro USD currency pair, and again I will put a vertical line there before I close my video, because I'm under pressure to keep this video okay exactly below 20 minutes. All right, so I'm going to color this vertical line in turquoise before I pause the video. So I will see you soon when it's 10 a.m. in New York and 3 p.m. in London. Speak to you soon. Pausing the video for the first time. Okay, traders, all right, the time now is 4 minutes past 10 a.m. in New York, 4 minutes past 3 p.m. in London on the 16th of January 2014. Let's continue with our discussion. Okay, this is the time the profession. You see the Euro USD, as I told you, okay, if we find a support above the pink line, okay, so we should give it a little bit of chance. So you see this tall candle, some people bought it, yeah, push it. I would prefer this candle now to be a little bit bearish. I want this one to see some traders are buying on the edge of the moving average 30 here. I'm going to wait a little bit more. I would prefer this candle to close first, and I would prefer this candle to be a little bit bearish. All right, which means pull it back a bit down here, and I will take it from there. All right, we'll see. All right, there's no need to rush, because sometimes trader will push you into a trend. Another thing I will do now, is to keep my eyes wide open. That's it. On the Dow Jones, you can see the Dow Jones. See what's happening here? The pink line. Some traders, you see the vertical line. That's why we pause the video for the first time. So we need to keep eyes on the Dow Jones, because this will influence the Euro USD. This is the problem that some forex traders are facing, because they don't know that the trading triangle, how a market indicator, how a market leader can influence another financial instrument. So that's why sometimes when New York is open, forex traders get into trouble, because they don't understand how the market functions. All right, the market is interconnected. Okay, there's no financial instrument that is independent on its own. Nothing other. Okay, they all interconnected. It is the market. All right, the market. So that's why we talk about the trading triangle. Okay, so now the Dow Jones pull back nicely near the pink line, but you remember if it doesn't go inside the channel, it's still bearish here because of this trend line here. You see the trend line that we drew yesterday on the 3-minute chart. So some traders, you can see aggressive sellers are selling straight away as soon as it pull back near this level. But the level we need to watch is this pink line. If it close below it and find a resistance below it, that will confirm the bearish pressure. The price may end up consolidating here, as I told you, so it's going to be funny. Now, before I close this video, I need to tell traders that some days, okay, the market will move, which means we go from A to B, and B will be far away from A. Some days the price will consolidate, all right, and usually day trader can get into trouble sometime when the market is consolidating, because they buy here and the price goes down. All right, and then they say, okay, it's going down, I will sell now. So they sell, and then they probably go up again. So if they don't figure out quickly the market patterns that we have for today, they can get into trouble. There's a high chance that today the market will oscillate between two levels, as we have seen for the Dow Jones on the daily chart and the hourly chart. There's a high chance that we may see a consolidation today, which means a small range, a small trading range. So we will see, but to be perfectly bullish, it must go back inside this channel here. Okay, I got only 2 minutes left, and I'm very careful. I don't have to go over my 20 minutes. I will leave it to traders, okay, to use okay, their common sense, and to follow the trading drill, and so they can make excellent trading decisions. So right, it is, guys. You see, that's what I was telling you. Now, what I'll do, this is the best time to buy the euro. All right, here you see, that's what I was telling you, that we are expecting this to be bearish. They allow it, you see. Now, this is the best time to buy. Buy here at 13634, and you can place your stop loss right here at 13623. That's it. Because as they break above this level here, you see the price break above, retest. But this one went too fast. We will prefer this one to be bearish, which is great. Professional were expecting that. Beautiful. Now you can buy. Now you can buy. And then you place your stop loss below this one, which is not too far away. And if it works, it works. But as you are doing this, because we know that we have to keep our eyes on the Dow Jones, I got only 1 minute left, ladies and gentlemen. We need to constantly, because it can be tricky trade to them. This is why I need to mention to trade. It can be tricky trade to them. So that's why we have to keep eyes on the Dow Jones constantly. Okay, the stock below this level is still bearish for the Dow Jones. So if we are buying the euro ladder, we need to keep eyes on it and be ready to grab our profit before it changes direction again. I hope you have learned something from this video, okay, and we put it to use to make excellent decisions. We are the TSTW, a 24 traders. Speak to you soon.